everyone. Welcome back to Outweigh Money Guru, your go-to source for the latest updates and advanced analysis on various commodities. I'm Nina, and today, on the 22nd of November 2023, we have some exciting news on the commodity front. Citi anticipates sustained growth in copper prices into 2024, revises forecasts upward. Our first piece of news comes from Citi Research, and it's all about copper. Citi has recently updated its commodity market forecasts, and the outlook is incredibly optimistic. They are anticipating a strong and continued rally in copper prices, extending not only through the end of 2023 but into early 2024. What's driving this positive projection? Well, Citi points to the easing of regulations in China's property and infrastructure sectors, which is expected to boost demand for copper. As a result, Citi has revised its near-term forecast for copper to an impressive $8,600 per ton, a substantial increase from the previous figure of $7,500 per ton. But that's not all. Iron ore prices are also on the rise. Citi's new 0 to 3 month forecast for iron ore is now set at $140 per ton, up from the earlier estimate of $120 per ton. This upward adjustment is fueled by an expected surge in demand, especially from the infrastructure and construction sectors. While copper and iron ore experience upward trends, the outlook for aluminium remains steady. Citi is maintaining its near-term target at $2,300 per ton, indicating a well-balanced market for this particular metal. Looking ahead to the fourth quarter of 2023, Citi has increased its average forecast for copper to $8,300 per ton, up from the prior estimate of $8,000 per ton. This adjustment aligns with Citi's expectation of a sustained, and potentially intensifying, copper rally towards the year-end and into the early months of 2024. Now, let's shift our focus to the global market dynamics impacting copper prices. In London, copper prices are holding steady, closely following developments in US monetary policy. The 3-month copper contract on the London Metal Exchange saw a marginal drop of 0.1% to $8,418 per metric ton. This maintains close proximity to its 2-month high achieved on September 15. Over in Shanghai, the primary copper contract for December traded at 67,940 yuan, $9,463.19 per ton, marking a 6-week peak. This steadiness is significant, considering the recent minutes from the US Federal Reserve, which indicate a cautious approach towards additional interest rate hikes. The Fed's cautious stance has impacted the dollar index, keeping it around its 2.5-month low. This makes the US-priced commodity more accessible for buyers using other currencies. And with China's robust demand and limited supply, we are seeing the Yangshan copper premium reaching a year high this week. Speaking of supply dynamics, Chile's state-owned mining giant, Codelco, announced the inaugural ore extraction from its Rayo Inca project. This signals potential shifts in supply dynamics that could have broader implications for the market. Now, let's take a quick look at how other metals are performing on the London Metal Exchange. Aluminium decreased by 0.2% to $2,246.50 a ton. Tin declined by 0.4% to $24,700. Zinc dropped 0.2% to $2,517. Lead decreased slightly by 0.2% to $2,259.50. And nickel fell 1.3% to $16,710. And the trends are mirrored on the Shanghai Futures Exchange. Aluminium down 0.3% to 18,795 yuan a ton, zinc falling 1.1% to 20,975 yuan, lead slipping 0.7% to 16,685 yuan, nickel dropping 2% to 129,030 yuan, and tin declining 0.8% to 205,440 yuan. That's all for today's update on the commodities market. If you found this information valuable, don't forget to like this video, subscribe to Outweigh Money Guru for more insightful updates, and hit that notification bell to stay informed. Until next time, happy investing.